The cryptocurrency market never sleeps, and every week a new project rises from nowhere, promising to revolutionize the blockchain space. This time, all eyes are on KGEN Coin, a new entrant that's been making waves across social media and trading charts. Many are calling it the next big thing in AI-powered crypto, while others warn it could just be another pump and dump scheme. So, what's really going on? Is KGEN a genuine innovation or just another speculative play riding the hype train? Let's dive deep and uncover the full story behind this coin's rise. KGEN, short for Knowledge Generation Network, is marketed as an AI-driven blockchain protocol that aims to connect decentralized applications, artificial intelligence systems, and gaming platforms with verified real users. The project's mission is ambitious to become a distribution layer for user verification and engagement, essentially serving as the bridge between Web3 developers and authentic participants. In simpler terms, KGEN wants to help AI and dApp creators ensure that the people using their services are real, active users rather than bots or fake accounts. If this system works as intended, it could fill one of the biggest gaps in the AI and blockchain ecosystem today: trust and verification. Now, let's talk about the tokenomics, because that's where the real story often lies. KGEN has a maximum supply of 1 billion tokens, with around 200 million currently in circulation. That means roughly 80% of the total tokens are still locked or waiting to be released through vesting schedules. This can be both a positive and a red flag. On one hand, a lower circulating supply creates scarcity and can help price stability in the short term. On the other, once those locked tokens start unlocking, they could flood the market with selling pressure, leading to potential dumps. At the time of writing, the token's market cap sits in the 40 million range, depending on daily volume, which is extremely high for a new project. Its 24-hour trading volume often crosses 100 million, indicating strong liquidity and speculative interest. Another reason investors are talking about KGEN is because of its backers. Reports suggest the project has connections with big-name venture firms like Jump Crypto, Accel, and Process Ventures, all serious players with deep pockets and strong reputations. Venture backing provides a level of legitimacy and often ensures better infrastructure and liquidity management. However, this doesn't guarantee long-term success. Many VC-backed projects pump initially when the hype is fresh, only to see heavy corrections later when early investors take profits. So, while having institutional names attached to the project is a green flag, retail investors should still be cautious and monitor vesting timelines and unlock events closely. From a technology perspective, KGEN's concept is appealing. The project focuses on using AI for user verification, data privacy, and decentralized authentication. It claims to allow developers to integrate AI-driven verification tools into their dApps, making user engagement safer and more reliable. In the current era where fake accounts, airdrop farmers, and automated bots flood ecosystems, that's a real problem worth solving. If KGEN can actually deliver a working product that integrates smoothly with popular platforms, it could have a long-term use case far beyond speculation. The challenge, however, is execution. Many crypto projects with promising ideas fail to gain traction because their technology never scales or finds real-world adoption. As of now, KGEN's ecosystem is still in the early stages, and there's limited data about actual usage metrics or live partnerships. When we shift to price action, things start to look even more interesting. After KGEN's listing, its chart showed explosive movements, a textbook example of what traders call a pump. The token surged rapidly, driven by social media buzz and high-volume trades on major exchanges. Within hours, early investors saw massive gains. But just as quickly, the token corrected, shedding a significant portion of those gains. Unlike some purely speculative coins, though KGEN didn't collapse to zero, it stabilized at a higher low and formed a new trading range. That suggests some level of genuine accumulation from investors who see long-term potential. Still, the volatility is extreme, and the market remains speculative, making KGEN a risky short-term trade unless managed carefully. On-chain analytics reveal another critical aspect of the KGEN story. Data shows that a large portion of the circulating supply is held by a small number of wallets. The top 10 wallets control over half of all tokens currently available on the market. This kind of concentration gives a handful of entities immense control over price action. If any of these major holders decide to sell, the impact could be immediate and severe. On the flip side, if those wallets belong to exchanges, market makers, or the project's official treasury, it might not be as dangerous as it looks. But again, without full transparency, retail investors must tread carefully and monitor wallet movements. On-chain transparency is the key to avoiding surprises in projects with such concentrated ownership. Meanwhile, social media sentiment has been overwhelmingly loud around KGEN. Twitter, Reddit, and Telegram are full of posts hyping the project, many promising 100x gains and the next AI revolution. That kind of attention can dock short-term price spikes, but it also tends to attract inexperienced traders and opportunists. Historically, when a new token gets this kind of viral ascension, it becomes a battleground between early whales and retail FOMO buyers. If you join early and exit strategically, you can profit. But if you enter late, you risk becoming exit liquidity for others. The lesson here is simple: when you see identical copy-paste posts or over-the-top promises, it's time to step back and analyze the fundamentals rather than blindly following the hype. From an analytical standpoint, KGEN finds itself at a fascinating intersection between AI and blockchain, two of the hottest investment themes in 2025. Projects that merge these sectors can attract massive attention and funding. If KGEN manages to position itself as a leading AI verification layer for decentralized applications, its value could multiply. But if it fails to gain adoption or deliver tangible progress beyond marketing buzz, it risks fading like many other overhyped tokens before it. Experts remain divided. Some see KGEN as a necessary evolution in the decentralized AI infrastructure space, while others warn that its market behavior resembles a speculative rally more than genuine growth. Now let's examine the red flags. The first major red flag is whale concentration, a small number of holders controlling most of the circulating supply. This raises questions about decentralization and market stability. Second, the vesting schedule is not fully transparent to the public. Without clear timelines on when locked tokens will be released, investors can't accurately predict potential selling pressure. Third, the marketing around KGEN feels a bit too aggressive. Many sponsored posts and influencer videos appeared simultaneously around its launch, suggesting a coordinated promotional campaign. Finally, because the technology is new and still in early stages, it hasn't been stress-tested in real-world conditions, meaning unforeseen bugs or scalability issues could emerge later. That said, there are also strong green flags worth noting. KGEN is addressing a real problem in the AI and blockchain world: user verification and trust, which gives it an actual purpose beyond speculation. It has notable backers, strong early liquidity, and high engagement across its communities. These factors indicate that the project isn't just vaporware or a meme coin without fundamentals. If the team follows through on its roadmap and delivers audited, functional products with measurable adoption, KGEN could mature into a legitimate Web3 infrastructure play. So, is KGEN a pump or a dump? The honest answer: it's a speculative pump with real potential. Right now, it's living in that exciting yet dangerous zone where both big profits and big losses are possible. In the short term, expect high volatility driven by trading bots, leverage, and hype cycles. Over the long term, KGEN's fate depends entirely on whether it can deliver a working product, secure partnerships, and prove its token actually has utility. Traders might find opportunities during big swings, but long-term investors should wait for confirmation of adoption before committing large amounts. Looking ahead to 2025, the outlook depends on adoption speed and market conditions. If the AI sector continues to grow and KGEN successfully integrates with real platforms, we could see the coin multiply its value 3 to 5 times from current levels. But if hype fades and no substantial developments occur, a 50-70% correction wouldn't be surprising. The line between next big thing and forgotten project is razor thin in crypto. Timing, execution, and sentiment will determine where KGEN lands on that spectrum. For those thinking about investing or trading, risk management is everything. Never allocate more than a small portion of your portfolio, ideally 1-2%, to speculative projects like this. Always set a stop loss to protect yourself from sudden dumps, and take profits gradually instead of waiting for unrealistic price targets. Remember, it's not the number of times you win in crypto that matters, it's the amount you keep after the market turns. Avoid FOMO entries, be patient during dips, and only add positions when fundamentals support the move. In summary, KGEN Coin represents both the promise and peril of the 2025 crypto market. It combines cutting-edge AI ambitions with the explosive volatility of a freshly launched token. The project has serious backers, a bold vision, and a rapidly growing community, all of which suggest it's more than just a flash in the pan. Yet, it also carries all the hallmarks of a short-term speculative frenzy: high whale control, thin transparency, and aggressive marketing. For traders, it's a thrilling opportunity. For long-term investors, it's a wait-and-watch scenario. If the team executes well and proves real adoption, KGEN could emerge as a cornerstone in the AI blockchain integration story. But if execution falters or hype dies out, it could become another cautionary tale in the volatile world of crypto. As always, do your own research, verify every claim, and never invest based solely on hype. Crypto rewards those who stay informed, disciplined, and patient. Whether KGEN turns out to be a rocket ship or a falling knife, one thing's for sure, it's a project worth watching closely in the months ahead.